Recorded beginning now. Well, welcome. This is Accounting 444, the Week 2 live lecture. And I first want to go into the course. And my name is Paula White, your instructor. I want to first go into the course to let you know where we are actually going for the rest of this course. I think some of you may be happy. In Week 2, the homework is, there's a quote here, the measurement of government's pollution remediation liability should include remediation work that the government expects to perform for other parties, however, and it gives you a whole paragraph here. And then a second paragraph and the source, and they want you to compare and contrast the requirements of fund accounting under GASB with the requirements of a similar corporate accounting under GAAP. So this is a paper, a minimum of 2 pages and with full APA. Then the other assignment for this week is you need to pick out 3 of the main sections within GASB Statement 34 and summarize each of those 3 sections. And no more than 3 pages and with full APA format. That's your homework this week, 2 papers. No quantitative calculations, no journal entries, no trying to figure out partnership distribution schedules, none of that. And the good news is it continues because week 3, we have 2 essays. You watch a YouTube for week 3, and then you review it, determine why it's important for governments to have a balanced budget and prepare for economic downturns. And likewise, the second one in week 3 is a paper also. And week 4, your final is a paper. So I think you've done the hard part of this class with the partnership. Yeah, it's the rest of your assignments with week 2 through week 4 are all papers. I know one of the people said, I know papers are easy, but I still don't like writing them. You know something, I didn't either when I was in college, but I'm glad I did now because, yeah, well, you do need to get the research and you have to start thinking and be critically thinking. But the difference between the accountants that stay in their initial job and accountants that grow to and get promotions are the ones that can write and the ones that can communicate. Because we have complex subjects that we know, and that's our profession, right? I think partnerships are rather complex. And as you will find out, the world of nonprofit accounting is not the easiest concept at all. But if you can communicate it to the common man who isn't an accounting person or isn't a CPA, if you can communicate those concepts to regular Joe USA, then you're promotable because you have been able to now take your detailed level of your profession and convert it into your own self and convert that into a message that people can understand. It's trying to explain what is a debit and what's a credit. Remember those topics back in your Accounting 101 days? Now you really know what they are. The good old days, Kenan said. The good old days when you were trying to balance your ledgers, right? Yeah, so that's where we're going from the rest of this class. Let me go back to the actual course modules. We had week 1 was partnerships, and that was complex. But week 2 is fund accounting, and that's the general category of nonprofit and government. And then week 3, we talk only about state and local governments. And week 4, we talk about non-government, non-business organizations. Now, what I want to do before we get into the PowerPoint and go to that extreme, let's go to somewhere I'm going to give you a gift. There's a website called guidestar.org, GUIDESTAR.org. Let me just show you here. GUIDE, GuideStar.STA. The PowerPoints are posted. I just posted it a few minutes ago for week 2. So here's guidestar.org. Oh, you're welcome. And I think I'm signed in. Let's see. Yes, I'm still signed in. But when you go to this website, you can register for an account, and it's free. This is a wonderful resource for nonprofits. And but the people that are online right now, what is a nonprofit you want to look to see if there's any information on? What's close to your heart or your location? What charity is in your news? They're doing a fundraiser for the Cystic Fibrosis Foundation. Okay, so let's go to Cystic. Thank you. Fibrosis. And I'm going to hit search. And there are 232 results here. Let me get organized here. So I'm going to put the chat window minimized so I can show you this whole thing. So GuideStar, we just searched on cystic fibrosis. We got 232 results. So you could choose it. You can refine your category by state, or by city, or by income. So let's see about the 11 that have more than $10 million in income. 2 are in California, 1 in Georgia, Illinois, Massachusetts, New Jersey. Let's see. So let's just go to the one in Colorado. See what's in there. And there's one. And it's called the National Jewish Health. And it must be a cystic fibrosis related not-for-profit. They have income of $213 million. They're also known as National Jewish Health in Denver. And let's read more. At this point, you can actually donate and get a premium package. But let's just play over here. Forms 990 and docs and financials. Form 990 and docs. Here you have the Form 990, which is the tax return for these particular organizations. And there's one for 2013, 12, and 11. They're probably still working on 2014. So let's open up 2013. And this is a tax return. And as you can see, it comes down to net assets or fund balances, which will make sense after this presentation today. So this is their income statement or their fund information. Statement of service accomplishments. Checklist of required schedules. Their governing body. Let's see if there's any of these attachments. This stuff is always kind of interesting. In additional data, compensation of officers. So we have these board directors. Member of the board. So far, these are all zeros on the left side. But Michael Salem, MD, his income is $849,000. Christine gets $354,000. Executive Vice President of Academic Affairs gets $450,000. And so you can see how much some of the people actually make in these organizations. So there's a lot of information that is really good information to find. Now I'm going to go back. So that was as of 2012, which was done ending June 30th for them, June 30th, 2013. Now I'm going to go back to the actual website and go to financials. And you're given the information here about their financials and revenues and balance sheets. And you could, it looks like upgrade now to the premium. But if you go to their website and type in CAFR, C-A-F-R, you may be able to find their financial statements. But a lot of the financial information is in their tax return, which is, I think, a very awesome thing to have access to. Now, let me go back to the chat window. Now I can see what you've said. Someone said, dang, I would be happy with only a fraction of that income. Well, that's true, but they're also people who actually can bring in, they're rainmakers. They can also bring in a lot of money in fundraising activities just by making a few phone calls. So their Rolodex helps them out getting a lot of that income. But isn't that great information to have available for free? And it's their tax returns, which has a lot of information to it. Would you have thought that nonprofits or charities or government associations would have something like their tax returns publicly exposed, where tax returns for corporations are not public knowledge. I said, yes, I would like to know that the company I'm donating to is an actual nonprofit. Exactly, that's from Kennan. Having when you're a nonprofit organization, you're not owned by anybody. You are to do the good work and the nature of the good work that you were chartered to do. No one owns stock in a nonprofit. It doesn't even have an equity section in the balance sheet. So it is in public domain, and the information is publicly available. And exactly, you want to know who they are, what their missions are, what their financial condition is, and how much they what percentage of their income actually goes to the purpose that they are a nonprofit because of. And that's always a big issue. 2% of our costs are administrative. The other 98% goes directly to our purpose. That's great. But sometimes nonprofits get in the news by being 70% is administrative and 30% goes to the purpose that we were chartered. So yeah, you can really see exactly what they're doing. So I just wanted to show you that, and I hope you all will get your own personal guidestar.org. Okay, we got a whole bunch of M's. Oh, okay. We in GuideStar, let's say, what's your first step that you do when you go for a job? Oh, your dog tried typing. What's the first thing you want to know about the company? Do you want to know anything about the company you're interviewing with? Yeah, you want to know if they're financially stable, how well they, let's say, what their, if they have any issues with paying people well, their financial health, what their mission statement is exactly, and you want to know where their heart is, if they're green or if they pollute the environment. You want to know a whole bunch of information about them. And as a corporation, you just go to their website, right, and pull, if they're publicly traded, and pull down their investor relations section of their website, and you have all their information on the audited financial statements and the 10K with the SEC and their annual report. For nonprofits, they're not owned by anybody. They're not on the stock exchange. So you can't really go to their website, go to investors section to get their information. But you do go into GuideStar and get the same type of information. So this is really a good gift I'm giving you right now. So I hope you take it and use it well for your careers too. So let's start with the PowerPoint. And I'm going to minimize this a little bit. Okay. And I'm just going to start. Okay, so the slideshow begins. And you have the slideshow already. I'm just slideshow. You have it. You have this PowerPoint up in the announcements already. So here's a pretty picture, fund accounting. And we're going to distinguish between non-business and profit enterprises. Exactly what is fund accounting? And the concepts of revenue, expenses, and expenditures as used in profit-oriented entities as well as nonprofit. How do we classify revenues and other resources for fund accounting and understanding the classification of expenditures? Right now, you're getting the feeling, I hope, that some of the words are changing for you. So let's just begin. Fund accounting is how we account for non-business organizations. Now, on the business side of the house, we want to earn a return on investment. We're in a competitive market, and we have liquidity concerns. Like, do we have enough money to pay? Do we have enough money to pay payroll this week? Do we need to get a short-term loan? Those type of things are more the conversations happening in a business entity. Earning a return on investment includes managing your net income. Who are your competitors? How do we go? What type of product do we need to have as a new product to get a step ahead of our competitors? All of those conversations are all with the business enterprise. However, those conversations do not exist for let's see. Oh yeah, they sure do. I won't repeat that to them. Yeah, I agree, Kenan. So non-business organizations, they provide socially desirable services without regard for financial gain. So there's 5 major classifications of non-business organizations, and they are the government, state, local, and federal. We have hospitals and other healthcare providers. You have colleges and universities. Many of them are not-for-profits. Voluntary health and welfare organizations, and other types of non-business organizations are trade associations, professional associations, museums, religious organizations. Churches are non-business organizations. So they do not have the focus of maximizing net income, maximizing the return on investment, who our competitors are. They are here to provide a socially desirable service without regard for financial gain. So the distinction is that there's an absence of a primary goal of earning a profit. There are no equity interests. The balance sheet we will see has the assets, has liabilities, and the last line is net assets, which is assets minus liabilities. There's no equity section. Seldom financed through users' charges, and they rely on political action, and they rely on fundraising campaigns. Their income determination model is generally not applicable. Restrictions or limitations on use of resources. So let's see. GASB is the Governmental Accounting Standards Board, and FASB is still the Financial Accounting Standards Board. FASB and GAAP, US GAAP, has been basically what you've all been studying on this entire curriculum. Is that true? Oh, yes, and a bit of the international, but basically the focus is on business, on profit, and on US GAAP, Financial Accounting Standards Board, and the IASB, which is also related to the I can't even think of it now. Foreign. I would never think I would have forgot that one. Well, I need some coffee today. So anyway, we're going to continue. GASB and FASB. GASB will cover the governmental units, federal units, veterans hospitals, state universities, as well as your the country government, county governments, school districts, municipalities, and port authorities. Those are all under the rules of GASB. Under FASB, we have private colleges, universities, and community colleges, private hospitals and voluntary health and welfare organizations, and private elementary schools, professional organizations, labor unions, civic organizations, and trade associations. At one of the locations I teach at, they have a business honor society called the DMD, Delta Mu Delta, and they are nonprofit, and I was able to find their information, their tax returns, on guidestar.org. Obviously, it wasn't a large amount because they're a small local chapter of an honor society, but that was even in GuideStar. So you can have a lot of information in GuideStar. So let's continue. So you have different fund entities. You have the expendable funds, proprietary funds, and fiduciary funds. Expendable ones are the basic fund accounting concepts. Proprietary is business type activity, and fiduciary would be agent or trustee. This will make more sense as we continue. Expendable fund entities, you have the financial resources dedicated to specific use. An example would be a capital project or a debt service fund. Resources consist of cash and claims to cash, and claims against the resources minus the claims against those same resources will give you your fund balance. And the measurement focuses on the flow of the current financial resources. So it's basically financial resource inflows by source minus the financial resources outflow by function will get you the change in the fund balance. So we have restricted and unrestricted fund entities. So this classification usually is for non-business organizations rather than governmental units. Restricted refers to resources that bear a legal restriction as to the use imposed by the parties outside the organization. A good example, I used to be a treasurer for a church back in Illinois, and they would have a restricted fund because people would contribute money in the name of a deceased relative. And they would say, well, I want this to go in the name of my mother to replace the stained glass windows in the church. And they would put $10,000 in that account. Now, in the operations of the church, if they got into trouble and they couldn't make payroll one time, they cannot use that $10,000 that was put in specifically for mothers dedicated stained glass windows. You can't do it. So it's what legal? You can't use a restricted fund for your general fund just because you need money. So if it's restricted because of the person who contributed it imposed a particular use for those funds. So you can't use it for general purposes. Okay. So proprietary fund entities, those activities are similar to a business enterprise. Example is a water or electric or water utility by a municipality, rental of real estate by a religious organization. I had a client who was a huge Catholic church in Illinois also, and they had a lunch program. They had they ran their own school, their own preschool and elementary school. So that would be a proprietary fund entity, because it's not running a school, is not running a church. So they were a church, but this was their school. So this would be more of a proprietary fund for them. And it focuses on the determination of net income, financial position, and cash flows. So we needed to know how the school was running with tuition income, less all the expenses, what their balance sheet looked like, and what their cash flows were all about. Seeing if there's, okay, that will protect it from someone. Yes, having these restricted funds will protect someone in the management of that organization to use the funds that you put in for your mother for a particular reason. They can't touch it. And the only use of your mother's money would be for those particular projects, like her favorite stained glass window project. Exactly, Kenan. Thank you for the comment. Yeah, it restricts people. So if you, a lot of times people have their heart within the organization. They want something else to happen in their name, and the money that they put in for that can only be used for that. The church, the same church I was treasurer for, we had to get a new roof. So there was a roofing campaign where please continue to contribute your regular tithes and offerings, but here's another another envelope, a different color than the other envelopes, but this envelope is only for the roof. So they would want you to contribute for the roof as well as continue your normal tithes and offerings. And the money that went into the roof envelopes only were used for the roof. I've always heard stories about how the money they donated for a specific project got swindled away. Well, it can get swindled away, but you have to have these controls set in place. I suggest having someone who knows accounting in these organizations so they can say, you cannot touch this. So a lot of it falls onto our profession as accountants. Exactly, Kenan. So now we have fiduciary fund entities. Those are more like pension trust funds and agency funds, which are like resources of taxes, bonds, and other receipts for individuals or outside organizations or other funds. You can kind of see why these don't quite fit into FASB and business functions. So budgetary fund entity, government funds. Approved resource flows are incorporated into the annual budgets. Budget expenditures are referred to as appropriations. You've heard these terms in the news. Every time they talk about the federal budget, every time they talk about state budgets, you hear words about appropriations, but that's what they're talking about. They're just simply talking about the parts of the budgets that will spend money. Oh, that project isn't appropriated, means that there's not a budget cash outflow for that particular project. And your approved budgets may be recorded in the accounting records, and they should be. Budgetary account integration is useful in the control and administration of the fund resources. So we have basic financial statements within fund accounting. One is government-wide, and one is the governmental fund, I can't read that word, expendable. So the government-wide is for non-fiduciary activities. It's short and long-run information, and it's the economic resources management concept and accrual basis of accounting. Where the government fund, it talks about the current financial resources. It's a modified accrual basis of accounting. Revenues are recognized and measurable when measurable and available. Expenditures are recorded when the liability is incurred. Okay, so this is where we start getting pulled away a little bit from FASB. What is the rule for revenue recognition? Can anyone tell me? Revenue recognition within FASB, US GAAP. Okay. Basically, revenue is recognized when it is earned. How can you apply that concept to property taxes? When does your city government or state government earn the taxes that they impose on your property? They don't. They're not giving you a service. They're saying because you have a house on a piece of land, they will tax you because they provide things like fire service and police. But if you don't use those services, it's not a revenue recognition in the GAAP concept. So yes, Sue, you're absolutely right. It's when they tell you how much your property taxes are and you pay them, it's recorded when, it's recognized when they can measure it and when the funds are available. So Sue said when it's received, she was absolutely right. So there, I went through that example to show you that the concepts are different. So it can't be, nonprofits and governmental accounting cannot be under US GAAP because they don't earn revenue because they're a service and they're a different type of a service. So continuing on. So let's see, this is for a question for all of us. When used in fund accounting, the term fund usually refers to a sum of money designated for a special purpose, a liability to other governmental units, the equity of a municipality in its own assets, or D, fiscal and accounting entity having a set of self-balancing accounts. So which one do you think that might be? A, B, C, or D? Ooh, it's D. It's the fiscal and accounting entity having a set of self-balancing accounts. It's just not a sum of money designated for a special purpose. If you were part of a nonprofit and part of your services was to provide counseling for battered women and their children, that particular service would have its own fund. And the fund would be the budget at the beginning of the year, and because they would get like cash resources from grants and from contributions from the outside. So that's where their funds would be coming from. So they would be budgeted to be able to run their department on, let's say, $60,000 throughout the year. So their fund, they're going to be spend down that money, and at the end of the year, there's no money in their bucket, their fund, so they can't spend any more money than what's in their fund. It's kind of a step back to cash basis accounting. If you don't have the cash, you can't spend it. So that's your fund. So it would be the fiscal and accounting entity having a set of self-balancing accounts. Oh, someone said, I wish the government would follow that advice. Certainly, and I wish the government also would go into kind of like the US GAAP, where you have to do financial statements and put all the cost in to all of the projects that you're working on. That would be nice too. Well, whoever would say that was required wouldn't have a job or wouldn't be reelected, unfortunately, but they should be. So here, revenue classification of revenues by fund and major revenue source. So they could be property taxes, income taxes, gifts, inheritances. This is a huge list of different things. Let's see, what's he saying? I bet there would be all kinds of shady issues found if they had to do that. Yeah. They have a lot of contracts that are 10-year contracts, 5-year contracts, and they only report the current year's impact. They don't record the entire liability for that they would have for the entire contract. So it would be nice for us to know what we are really liable for the entire period of all the contracts. So see, this is going to be an interesting subject matter. So other financing sources, including debt issue proceeds and inter-fund operating transfers. So you can transfer money within funds, but not with the restricted funds. So recognition of revenue is when it's objectively measured and is available. So Sue's correct, it's when it's received. And it can be objectively measured. Recognition of revenue. Okay, so when is property taxes recognized? When they're levied. How about income tax and sales tax? When those returns are filed with payment. Fines and forfeitures. When they're collected. Sales of property at the time of sale. How about pledges? You know, like the Jerry Lewis telethon, he has all these people calling in to pledge money. The pledges are at the time of the pledge. Ooh. And then what about grants? May or may not be at the time authorized. So this is a lot different than your regular accrual accounting. So at the time of the pledge is when they recognize revenue So they have a big, anyone that runs those type of campaigns have a big issue when someone called in with a pledge and the pledge was never followed up with payment. I'm sure they have a pretty good sized percentage of people who get caught up in the moment, call to pledge, and then forget to put the check in the mail. So what about classifying expenditures and other resources? So the function would be how public safety, the function would be public safety. What would character be? Current operating. Activity would be drug control. Object class would be supplies or salaries. That's an interesting term, object class, because it's basically what we consider expenses. And an organizational unit would be fire or police department. So sometimes you have to transfer to other funds. Classified separately from expenditures for financial reporting purposes. So we have appropriations, which are authorizations to spend. You have an encumbrance, which is your purchase order or contract. And then you have the expenditure, which means you receive the goods of the encumbrance of the purchase order. You receive the goods. Now it's in. It should be okay to spend them to release the funds, and then when you receive the goods, then disbursement happens and payment happens. So this should be a very important slide for you to keep, because it kind of very easily shows you the words and what they mean in our language. Our language, I mean, in the accounting language that you've learned so far. Purchase order, receipt of goods, payment, versus appropriation, encumbrance, and expenditure. So, authority granted by a legislative body to make expenditures and to incur obligations during a fiscal year is the definition of appropriation, authorization, encumbrance, expenditure. What do you think? Appropriation. Authorization to spend. And let's see what this question was again. Authority granted by the legislative body to make expenditures and incur obligations. Yeah, it's appropriated. It's your budget. You can go ahead and go forth. Okay, so here we have some transactions. Listed are transactions of the town of Jackson. Contract was signed with an independent company to do trash collections for the year. The contract price was $96,000. The first monthly bill of $8,000 was received from the trash collector, and the $8,000 bill was paid. So now we're going to see how these journal entries in the general fund actually look. So contract was signed with the independent company to do the trash collection for the year. So you have an encumbrance of $96,000, and you have a reserve for encumbrances for $96,000. Think of the encumbrance as the budget, and think of the reserve as a temporary holding account that needs to be zeroed out at the end of the year. 2, the first monthly bill of $8,000 was received from the trash collector. The $8,000 bill was paid. So you have expenditures and you have contracts payable. reserve for encumbrances, and encumbrance. So it's a double entry. So now we have a real bill, and it's not a budget. So let's go back to here. We're reversing this entry for the amount of $8,000. The encumbrance, $8,000 was in this budget or authorization, and $8,000 was in this temporary holding account. So we're going to reverse that here, and then have an expenditure and a contracts payable. Then to pay the bill, you debit contracts payable and credit cash. It feels a little bit different than accrual accounting, but it ends up pretty much the same. Does this example make sense to you at this stage? Well, I'm going to assume silence is yes, and I'm going to move forward. We have another question for y'all. What type of an account is used to earmark? Good, thank you, Sue. What type of account is used to earmark the fund balance to liquidate the contingent obligations of goods ordered but not yet received? And let's see. Yes, it's the reserve for encumbrances. And yes, they got it right. Congratulations. So capital expenditures, the expendable fund, is treated as a current period expenditure. So here we have Middletown, they purchased a police car for $10,000. So they're going to have a debit expenditures and credit cash. So now we have this exercise 17-3. And we have a budget consisting of estimated revenues of $1,950,000, appropriations for expenditures of $1,008,000 was passed by the town council. We have property taxes of $1,150,000 assessed. $1,115,000 are expected to be collectible. So it looks like $35,000 is not expected to be collected. Property taxes in the amount of $1,080,000 were collected. $1,080,000 of this expectation. And equipment costing $200,000 was purchased, and the old equipment was sold at $24,000. So let's see what these look like. So the budget consisting of $1,950,000 was approved. Appropriation for expenditures was passed. So you have estimated revenues, debit, appropriations, credit, $1,008,000, and those didn't balance out. So now we have an unreserved fund balance of $150,000. Then you have property taxes of $1,150,000 assessed, $115,000 expected to be collected, and there's the estimated uncollectible taxes. So the budget is the receivable, the revenue is the expected, and the difference is the estimated uncollectible. And you collected $1,080,000 in property taxes. So this $1,180,000 cash comes in, and you're going to credit the $1,150,000 account. The property taxes receivable will be credited, reducing its balance to, what is it, $70,000 yet to be collected. So hopefully this is starting to, there's a pattern to this. So equipment costing $200,000 is purchased, and the old equipment was sold at $24,000. So you have expenditures out and cash. And then you have cash for $24,000, and you have revenue. So this is quite different than accrual accounting. It's basically what's currently happening. So equipment costing $200,000 is purchased. You need an expenditure, and you needed to spend cash. You sold the O equipment for $24,000. You debit cash, you credit revenue. There's no depreciation, no net book value, no removing the original cost and accumulated depreciation from the books. None of that. It's just debit cash, credit revenue. And let's do one more, and then we'll continue on. So here's a pre-closing trial balance for the general fund. And we have cash, CDs, property taxes receivable, estimated revenue. Here's your expenditures. Your expenditures for 2007, the previous year. Encumbrances. We have estimated uncollectible taxes, vouchers payable, unreserved fund balances, your reserve for encumbrances, and your reserve for encumbrances 2007, your appropriations, and your revenue. So let's prepare the closing entries. So first one is to get rid of revenue and the estimated revenue, $1,750,000, $1,690,000. So $1,750,000. I'm sorry, the $1,690,000, and was the $1,075,000? Yeah, and then the difference had to go into the unreserved fund balance. Then the next one is the clearing out the expenses, which is the appropriations and the encumbrances and expenditures. So $1,550,000, $310,000. So the $1,550,000 appropriations, $1,310,000 expenditures, and encumbrances $165,000. So those three got closed out with the second entry. And the difference goes to the unreserved fund balance. And next is the reserve for income. Get rid of the 2007 because it's done. It's over 24 months old. So reserve for encumbrances of 35, expenditures for 2007, 32, and the amount, the difference goes to the unreserved fund balance. And then problem 17.1 is a comprehensive example. So I think I'll let us stop at that point. And let me get your chat box so I can see it. So basically, this chapter 17 PowerPoint is up in this task website so that you can see it. It's in the announcements. So you can pull that down and it'll work for you. And basically you have two short papers. I think 2 pages or less this week. I probably did, but I need to, oh, you wanted me to open it up earlier? You want me to open up the assessment from the previous week, correct, Kinsey? Because I was going to do it right after this essay, right after this lecture. Are we good? Oh, I did not get that message. Okay, I'm going to end this. Hang on. I just want to let me end this recording,